Hello, everyone. A very warm welcome to all of you. Thank you for joining us today amidst the COVID 19 crisis. I am Deepthi Lane. I head the market intelligence vertical at Fiber to Fashion, and I will be the one taking you through this webinar today. Fiber to Fashion is a 20-year-old company. We are basically into providing a gamut of services to the textile and apparel industry that includes B2B services, market research services, jobs, advertisements, and so on. We're all aware of the COVID 19 pandemic and how it is affecting the textile and apparel supply chain. Let us review here how lasting this effect would be and what to expect from the remaining months of 2020. Before we begin, let me just take you through the agenda that we'll be having for this webinar today. We'll first discuss the various kinds of impact COVID 19 has had on the global economy, the impact specifically on brands and retailers, manufacturers, and consumers, China's challenged position as a textile and apparel manufacturer and exporter, and are there any emerging beneficiary countries? What should be the contingency plans for future for such events happening again? And what will 2020 be amidst the COVID-19 crisis, the already escalated effects of US-China trade war, and the recent Brexit? We will end up the webinar with an exclusive discussion with Mr. Rick Helfenbein, of course, an independent consultant, the former president and CEO of the American Apparel and Footwear Association. I would rightly like to term COVID-19 as the black swan for 2020. Before we begin, just a few snapshots of how the coronavirus impact has been on macroeconomic factors. Now, if we see on the impact on stock markets has been very, very deepening since the start of the outbreak, which is clearly visible in this graph. Similarly, if I look at oil prices, I think they have been the lowest since June 2001. That is close to 20 years. And the rate has recently touched $26.22 USD per barrel. If I look at the global economic growth, the OECD recently downgraded the 2020 real GDP growth projections for almost all economies. And if it is to be correct, a 5 to 10% drop in global GDP in this quarter is expected as per the S&P Global ratings. And the hit to global economic activity from the measures to slow the spread of the coronavirus pandemic is going to be massive. If I talk about individual economies of US, Europe, China, and emerging markets, of course, because US and Europe have been primarily affected in terms of the size of the epidemic there, the decline in GDP for both in the second quarters now looks to be at least double the 6% contraction that was estimated by S&P last week. And of course, in the first quarter, a contraction is also expected now. Europe will be a largely more hit in the first quarter because it was affected first for the pandemic side. Surprisingly, in China, if we see, the spread of the virus appears largely contained and the economy seems to be stabilizing. So the estimated GDP contraction for 13% in the first quarter should again begin to grow in the second quarter. For other emerging markets like India, Brazil, and Mexico, which were the last ones to be hit, there is currently less data to draw from, but we expect a similar kind of shock with possible double-digit percentage GDP declines in the second quarter. If you look at the price movement for crude in the last 3 months, it is clearly seen that it has considerably dropped down from what it was on 1st of December 2019, which was at 62.50 USD per barrel, to 27.19 USD per barrel on the 22nd of March. Similarly, if I look at the international Kotlook index prices, I see they have taken a hit from 1st of December, that was 74.05 cents per pound to 62.98 on the 22nd of March. So primarily, two major raw materials for the textile and apparel industry have been hit hard. In terms of global currency during the pandemic, this chart presents a comparative analysis of what were the exchange rates as on 1st of January, the first week of January, and during the March last week. So if you see INR has depreciated, so has Chinese yuan, so has euro, so has Bangladeshi taka, the Great Britain pound, and Japanese yen. So yes, of course, all the currencies have got affected. If I summarize the effects of the slowdown or of the COVID-19 crisis, we can clearly see that there is a slowdown in economic growth. And as the COVID-19 outbreak continues to spread, it is expected that a 5 to 10% drop will be there in the global GDP in the next quarter. If I look at the impact on raw material prices, we clearly saw how US crude fell to a 20-year low amid lockdowns. And with many manufacturers temporarily closing production and stores across the country, cotton prices have also taken a major hit. Another important factor that we want to consider here is that we know eventually the world economy will recover and oil demand will stop falling. But in the months ahead, the amount of supply over demand is of such massive and unprecedented scale that the governments will be struggling to manage the damage it will cause to oil and other related industries, including textiles. Similarly, chemical is one industry which is closely related to the oil industry, and the oil price collapse is likely to lead to delays in energy and chemical investments in both developed and developing countries. The oil price collapse will also trigger a sharp and broad decline in the prices of petrochemicals and also those for synthetic fibers. If I look at the point for cancellation of orders, I think in the last few weeks, we have seen that Bangladesh ready-made garment sector is almost standing on the brink of a disaster. Factories have been facing a crush of daily order cancellations from brands, and an estimated 1.44 billion worth of export orders have been cancelled. India is currently going through the same situation, and so are major Asian manufacturing nations. Brands and retailers are canceling and postponing orders due to store closures in Europe and the United States. And this is all because of a result of preventive action for their staff, as well as because of limited consumer footfall. Another significant factor that we want to point out here is the labor unemployment that is going to take place in the next quarter, in the next 6 months, primarily in the Asian countries. These order cancellations by brands have risked the livelihoods of millions of garment workers. Suppliers have been forced to lay off or suspend workers. And the ILO has estimated that COVID could destroy 25 million jobs worldwide across industries. That's a huge, huge number. Lastly, there is a paradigm shift expected in the consumer behavior. From loving to shop in-store to going digital, from doing physical meetings to making decisions through video conferencing, and from attending glamorous fashion events to viewing live streaming at digital platforms. This change in behavior is here to stay and may become the new normal for consumers. If that is supposed to be, brands and retailers need to take key account of this. If I look at the impact on manufacturers, brands, and retails and consumers, I see that manufacturers are facing postponement or cancellation of orders, and accordingly, it has resulted in a cash-tight position for them. Factory shutdowns have happened due to country lockdowns. Labor is either absent or not returning to work amidst health fear, and there is a huge shortage of raw materials for production. In terms of effects of brand and retailers, there are late deliveries for spring-summer products, which will affect the offering and assortment to consumers. Store closures in various parts of the world for an undetermined period, which is severely going to affect their top line and bottom line. And suspension of fashion shows, which will affect the cycle of bringing fresh collection to consumers. As regards consumers, there is going to be limited or no buying. Stay-at-home culture is definitely going to push e-commerce, and the paradigm shift that we spoke about is going to influence the kind of buying that happens in the next 6 to 12 months. Now, many of the aspects point out that China's position has been challenged and there could be emerging beneficiary countries coming out of it when we were talking about this in January. But with the current scenario wherein all of Asia has been affected, US has been affected, Europe has been affected, does really any emerging beneficiary country stand a chance? Now, if we look at the US imports of apparel, we clearly see that year on year, Jan 19 and Jan 20, there has been a significant change of minus 53% in exports of China to the United States. And the largest beneficiaries have been Vietnam, Bangladesh, and Indonesia. Similarly, if I look at the EU import of apparel, again, China's exports have gone down, but so has Bangladesh exports. Turkey has gotten up in the position, Pakistan and Myanmar. If I look at UK to be specific, again, China imports have gone down. Bangladesh, Italy, and Netherlands have considerably changed up their percentage shares in these markets. The idea behind comparing all of these countries with China is to understand whether really are any of these countries going to emerge as a significant beneficiary in the current scenario. We understand that businesses have been taking actions to reduce their risk and their dependence on Chinese manufacturing. But even in those circumstances where countries are not manufacturing directly in China, they are going to feel the impact since China is responsible for close to 35% of all global textile exports. Also, especially in cases where there seems to be over-reliance on China, it is going to be very, very difficult to shift the entire production from China. Even though it is challenged by smaller rivals like Vietnam, Bangladesh, and Cambodia, whose shipment rose dramatically at the beginning of this year, its position is still at a place which is unmatched by any other. Similarly, if we look at Vietnam, Vietnam saw an year-on-year export growth for garments decline to just 1.7% this January and February, according to the Textile Industry Group in Vietnam. And that figure is expected to fall into the red now that the US and Europe are locked down against the coronavirus. Vietnamese authorities reckon that exports to European markets could decrease by 8% in the first and second quarter of this year. And local reports already suggest that dozens of apparel companies have already lost European and US supply contracts. If we look at Bangladesh, I think we're all aware Bangladeshi factories have so far lost an estimated $1.44 billion due to cancelled or suspended orders from international brands. Even though it is a second largest garment exporter after China, but it is facing a challenge because it has large dependence on China for raw materials. Cambodia is another country where the government has predicted that as many as 200 factories employing roughly 1.6 million workers might have to temporarily close their operations if they run out of raw material imports from China. Though India was enough equipped, it had enough backward linkage to satisfy apparel buyers, but yet due to capacity limitations, the scope of serving that kind of business is limited. India is also under lockdown and the chances of factories opening look really bleak. Rising Chinese manufacturing costs, however, have given an advantage to Turkish manufacturers So has the slide in value of Turkish lira, which has made Turkey an affordable option for many of brands and retailers. So clearly, we see that Asia's textile factories are expected to suffer much more from declining Europe and American retail demand than they have in more recent months because of China's virus disrupted supply chains. The greatest concern, however, in the upcoming seasons will remain a lack of consumer confidence. If I see the contingency plans for future for brands and retailers, there's nothing new that we have not talked about in the past. But I think it emphasizes all the more the need for all of these pointers. First, of course, is nearshore manufacturing, which means unpredictability may mean manufacturing closer to home and reliance on robots. A decade ago, it was easier for apparel manufacturing to outsource to China and other Asian countries. With rising labor costs, the shrinking fashion cycles, and environmental consumerism has forced apparel retailers to nearshore their manufacturing activities. And COVID is expected to intensify this trend. Second, we would like to talk about digitization. Investing in digital technologies may streamline efficiencies through solution providers to secure a more transparent and a kind of more tighter supply chain. Third would be, of course, automation. Fully automated warehouses and distribution centers may provide a solution to supply chain disruption where there exists particularly high population densities, and those that would cause significant disruption in case of temporary shutdowns like these. Redefining logistics, of course, brands need to reconsider their processes for shipping and inventory reallocation. They should always consider new modes that may offer the best service considering the crisis. For example, turning to air or water transportation for the first time, bulk shipping, etc. So there has to be a lot of trial and error methods at that front. Next would be managing communication. Now, brands build a buffer of inventory into their supply chains, but it is more critical and crucial for them to redirect inventory from shut stores to active stores in other regions when required. And this requires intensified communication to be managed with the entire supply chain. Collaborate with suppliers would be the last point that I like to mention here, and this seems to be the most essential element today. Brands need to work hand in hand with suppliers, essentially in times of crisis like these, to overcome market situations. A super strong supplier base is extremely essential to remain ahead of the competition. Coming down to what would 2020 be amidst the COVID-19, US-China trade war, and Brexit? And what should you expect? So first, of course, the global trade volume of the world apparel will be hit hard in the short term by COVID-19. With China, US, and EU being the epicenters of the virus, the demand for apparel consumption in China, EU, and US, the top 3 apparel consumption markets, is expected to drop sharply, which is, of course, going to influence the entire world trade. Textile powerhouses such as Bangladesh, Vietnam, Myanmar, and Cambodia have been hit by shortages of raw materials produced in mainland China. As a result, several factories have been forced to shut down in order to account for input shortages. And there will be a demand shock too in the regions implementing strict quarantine measures, such as the closure of non-food retailers. The other factor that is going to impact trade is also because consumers are limiting discretionary spending amidst the drop in confidence and the pressure on income. Second, in our view, China and Bangladesh would be hit the hardest, since they are the largest exporters of apparel with their unparalleled production capacities. They're often used to fulfill large volumes, sourcing orders, and which countries like India and Vietnam cannot. However, brands and retailers have started to cancel these large quantity orders. There is going to be a significant loss to China and Bangladesh apparel exports. Also, because US and EU apparel imports from China cover almost all major categories, So we expect that China will be the most exposed to order cancellations. Adding to that, I think it would be the effect of last year's US-China trade war, because of which many US and EU fashion brands had already been shifting sourcing orders from China to other Asian countries. And I believe in comparison with a more diversified export market, apparel factories in Vietnam are in a better position and have more flexibility to mitigate the impact of declined import demand, since close to 40% of Vietnam apparel exports went to other markets in the world. Turkey and UK seem to be some potential winners in the short term because of supply chain disruptions, where textile manufacturers are reporting a spike in new businesses due to lack of input supply from mainland China. Again, what we discussed in the first section, there is going to be a huge impact on Asian employment, because leading apparel exporting countries like Bangladesh, Vietnam, Cambodia may have to cut 4 to 9% of their jobs in the garment sector. With the fact that developing countries like Bangladesh and Cambodia, the apparel sector remains the single largest job creator for the local economy, especially for the women, the long-term effects of these job cuts would be devastating for these economies. So there is going to be a huge impact on the economies of these countries because of the unemployment factor. Fourthly, revival pace of the US, EU, and Chinese economies will define the second half of 2020. Since these are the ones to define fashion trends, collections, as well as the consumption of apparels, how soon these economies will revive back will play a significant role in deciding the apparel industry's forecast for the second half of this year. What we do understand is that the global apparel supply chain would continue to face some turbulent time in the next 1 to 2 years, even if COVID-19 gradually gets under control in the second half of 2020. But the repercussions in the form of labor shortages, raw material price hikes, and lack of production capacities will be hard to contain in a short span of time. Overall, if we see, the textiles and apparel industry will be negatively affected over the short term, as both supply and demand factors are likely to constrain growth. Now, there also has been a different point of view from some analysts who believe that consumption, including for clothing, may skyrocket in the West after their populations come out of the quarantine, or after these situations for COVID are contained. So they would satisfy their literally pent-up demand, and that would mean garment makers will need to continue paying for raw materials and labor without immediately underlying orders and payments. In similar case, maybe consumption will also pick up, but stockpiling, however, could drive down the price of apparel once the crisis ends, as the cash starves manufacturers, which we believe will race to the bottom to assure their stored and aging products are sold quickly. So we saw how the economies of US, EU, and China will be the ones deciding the future of the textile and apparel industry. Let us deliberate on this further with our special guest today, Mr. Rick Helfenbein, independent consultant and the former president and CEO of the American Apparel and Footwear Association. Hi, Rick. Welcome to the webinar. Extremely glad you could join in today. Before we begin, I'd like to have a quick check on how is the situation in the United States as of today.
Well, first of all, pleased and honored to be here with you. And second of all, I'll tell you that that's a question that you can ask just about every day, because every day lately, this situation changes.
True.
I'm talking to you now from New York City, and I have to tell you, it's a little bizarre here. Very quiet on the streets, hardly anybody outside. You see people walking their dogs and then running back inside. You see a lot of people walking around with face masks, which is unusual for New York,
right?
But helpful. So the world is a little bit upside down right now, but we're all doing our best to remain optimistic.
True. We're all hoping that this ends soon and all of us stay safe amidst all of this crisis. So we have a set of questions for you, which we think you would be the best person to have interaction with. So I will begin with the first question that I have for you. And that would be that 2020 began with the coronavirus crisis amidst the apparel manufacturers and brands. So, in your view, how did this Black Swan event affect the textile and apparel industry? And how long do you think the industry will take to recover from this?
Well, that's that's a tough question, but I'll give you the best answer that I can possibly give at this time. You know, we learned about what was going on in China, in Wuhan, in January, and saw how everybody was reacting to it over there.
Mm-hmm.
And you know, at that time, I don't know that anyone was 100% sure that it was a black swan event, which is an unpredictable event with the potential for severe consequences. At that time, it was reminiscent to most of us in the industry as something like SARS, something that happened, was a little bizarre, it had some severe consequences, and then we all got back, you know, up on our feet.
Right.
This is clearly different because it is global.
Mm-hmm.
And spreading, and what started as a supply side problem for our industry out of China is now having a total bounce back and becoming a demand side problem globally.
Right.
Um, the the key question that you asked is how long, and you know, that's a question that I can't answer. Dr. Fausti can't answer. Hardly anyone can give you a straight answer to that. I can tell you because my phone is ringing off the hook with people, you know, asking similar questions.
Right.
That my best guess right now is for every 6 weeks that we are shuttered, you're looking about 6 months to recover. So the U.S. has been shuttered pretty much on the retail side since the middle of March. We go on for 6 weeks, and then maybe 6 months later, we'll, you know, have some degree of getting back to business. But every additional 6 weeks that goes on is going to just take that much longer to recover because the ramifications are so deep along the supply chain, and they affect all of our supply chain partners. So it goes deeper and deeper into the cycle the longer that goes on. The quicker that this resolves, the sooner we'll all be back in up on our feet and trying to replicate some degree of normalcy.
Right, true. Because that is also what we estimate is that at least the industry will take next to 6 to 12 months to at least kind of contain the damage the COVID-19 crisis has done to the industry. But we hope that this ends really soon. And now, out of this scenario, I would like to derive the second question that I have for you. That would be that do you think any of the other manufacturing countries can benefit out of this sudden disruption in the supply chain?
Well, you know, to be candid, I have to tell you, I don't know that anyone um, gets a benefit out of this. It's pretty disastrous all the way around, and I think we're sharing it, sharing the problem globally, and honestly, some countries will suffer worse than others. I think we all realize that at this point. But you have to look at the supply chain. Let's just look at apparel, and let's look at the supply chain going into the United States. In terms of market share, when we look at the numbers, the SME numbers through the end of last year, China had a 40% market share.
Right.
Vietnam was second with 14.2%. Bangladesh is third with 7.1%. Indonesia was fourth at 4%. India at 4%. Cambodia at 3.8%. Honduras 3.7%. Mexico at 2.9%. Add all that up, and you've got 8 countries with 80% share of the U.S. market. and
Right.
China and Vietnam together being the largest. So then you go down the same list and you look at it on a country by country basis. And China, which was the first to get hit, is now pretty much up and running. So that's good, except that the demand side has fallen off. So factories now be 80, 85%, 90% up and running, but orders are falling off. So you've got problems there. And then you go to Vietnam, which certain parts of Vietnam um, have been shuttering. It's not the whole country yet, it's piece by piece. And then you've got slowdown there equally as well because the demand side has fallen off. The biggest problem right now is Bangladesh. And I think everybody knows that we've had a lot of issues coming out of Bangladesh because Bangladesh is so dependent on garment exports to the world. I think it's like 85% of the exports. It's a $41 billion business for them.
Right.
And the country is on lockdown, but the factories to some degree are remaining open. Yet they received a large amount of cancellations, and that has a terrible downstream consequence. And a lot of people, we can talk about this later, particularly the International Chamber of Commerce, are trying to see what they can do to modify the orders that are being canceled and get everybody to realize the downstream consequence of that. Indonesia is operating, but maybe at half capacity. India, where you guys are, is I believe on lockdown right now through the middle of
Yes,
April.
yes. We're just for a
Uh,
lockdown of the next 2 weeks, another 2 weeks to go for the lockdown. And we
and the
hope by
last
that
3 weeks,
time we're able to flatten the curve.
well, we're all hopeful for that. The last 3 years, Cambodia, which is working somewhat normal hours now, but not having any overtime, to my knowledge. Honduras, right now, most factories are closed. And Mexico doesn't have a lot of cases, but there's also, fall off. So we're looking at 80% of the U.S. market in terms of countries, and we're looking at severely diminished capacity to produce if America was suddenly to get up and running very quickly. And we have to be really careful go forward that things like order cancellation don't just destroy the supply side, because the demand side gets back up and running, and we may have created downstream damage to the supply chain, which would be just awful.
Absolutely. So do you
Just
think
awful.
brands and retailers should take some accountability for these cancellations or postponement of the orders? For example, H&M recently announced that they will be, not canceling any of the orders they have put forth for the benefit of for the laborers who are working in Bangladesh, because the Bangladesh economy is already on the brink of a disaster because of the cancellations of all of these orders. So do you think brands and retailers should come forward and play a significant role at this point of time?
Well, I'll tell you, kudos to H&M for stepping up and stepping up quickly. And we've also seen companies with great social consciousness like PVH and Target and Marks and Spencer stepping up now equally as well. So
Absolutely.
you have to be proud of these countries that will honor their obligations, and that bodes well for the industry. And we hope down the road more and more will step up and be heard. Now, you also have to counter to that. Isn't it better to renegotiate all this for the betterment of the supply chain than to just cancel something? And
Absolutely.
the worst thing that anyone could do right now, and I say this to any buyer out there, is to exercise a force majeure in the contract. That's the worst thing you could do for a whole host of reasons. And there are reasons that everybody needs to be aware of. If you pull the plug on force majeure, that order gets pulled out of the factory's logbook. You pull that out, the banks come in to check the liquidity, and you could force somebody inadvertently into bankruptcy, which is something nobody wants. So I tell any buyer who's listening to this, that's your worst thing you can possibly do. Find a way, find a way to get financing, find a way to delay, defer, but canceling is just the worst thing anyone could do right now.
True, true. We do hope that all of this trend, to begin with H&M, PVH, and companies like these, come forward and do the needful for the lower strata of the society, for the laborers, for all the people whose daily wages are dependent on the garment industry. So I think yes. I'd like to move forward to another aspect that I'd like to point out here. Events, conferences, trade fairs already stand cancelled for the first half of the year amidst the COVID-19 fears. Do you think this 6 months, 8 months lag will impact the fashion cycles, the R&D organizations? For example, many of the R&D conferences, seminars have been postponed, have been cancelled. So is there going to be an impact on the textile and garment industry on that front?
Yeah, I think the world is shifting to more virtual environment, and I think you're going to see a lot of people doing things differently. For the big retailers, by the time they get to a trade show, usually they've already made their purchases. Where it hurts is the small retailers who would go to a show like the Magic Show, and they want to feel goods, and they want to touch goods, and they want to price goods, and they want to negotiate. That type of interaction, until we have an all clear, is going to be clearly 6 feet apart and at arm's length. So it's going to affect the buying side, and people have to realize early on that they may be showing their lines virtually for a while, until everyone has the confidence to get on a plane, to stay in a hotel, to go to a convention. Night after night on the internet, we hear about people who went to some medical convention and met 100 people, and how many of them came down with COVID-19. So, until we get a better handle on this, people are going to remain very cautious.
Right.
And, everybody who plans big trade shows better start thinking real quickly how to have a big trade show in a virtual environment, because the world is upside down.
True. I believe that this will also lead to the paradigm shift in the consumer behavior on all fronts, not only on the event or exhibition side, but also on the educational side, where a lot of institutions are now promoting classes online because of the 2-month, 1-month lockdown in many of the countries. And similarly, for fashion retailers, they have provided virtual houses or online shopping. All of this, I believe, is going to have a good boom in the next 6 to 12 months.
I would agree.
Yeah, okay. So, yes, one question that I needed special insights from you on would be, we already know that China already had its existing condition prolonging after the prolonging US-China trade war, and COVID-19 has been an addition to that. Do you think China needs a plan of action to sustain its position in the supply chain, or do you think it is not? It does not need. I mean, it's still at the same dominating stage it was.
Well, first of all, the China trade war at this point has, this has almost reached a stage where it's ludicrous. If the United States achieved their goal of getting a better balance, then why do we still have tariffs, even in this torrid importing economy? Why are we still tariffing goods from China, particularly apparel at 7.5%, and footwear at 7.5%, and handbags and backpacks at 25%? Why are we doing this now? We have all petitioned the government at great lengths to, first to cancel the tariffs, which they're seemingly unwilling to do, and second, to at least suspend them for 90 days. And there are rumors right now there may be some suspension, but that may not affect the goods coming from China. We're not exactly sure at this point what they might suspend. But it's, the government has just essentially raised the price for Americans to buy goods out of China. Then you get, that begets the, excuse me, the other question as to why, why is China still have a 40% market share? And the answer to that's pretty simple. China does it better. And you look at the customer base in America today, which is, emphasis on the millennial customer. And the millennial customer as a buyer thinks differently. They want sustainability. They want to protect the environment. They want product quality, product integrity. They want to know what's going on in your supply chain. And, for all the things in the world that you can say about China, China's been actually one of the best at doing that. Plus, product quality and delivering on time. So China being up and running right now puts it in a better position to the extent that the, downstream damage to India, Indonesia, Bangladesh, Cambodia, and Mexico may take longer to recover. Right. So China right now is sitting in a good position. And, as the president says, we'll have to see what happens.
Right. And do you think brands and retailers, there could be some contingency plans for brands to overcome such situations in the future? Can onshoring or nearshoring be a permanent solution to this problem?
We talk about onshoring constantly, and quite frankly, onshoring in the United States has had a dramatic increase. And you know what that increase has been? From like 2.5% market share to 3% market share. As much as we'd like to do more locally, truth be told, it's just not there. It sounds great on paper, but the reality is it doesn't work. So we tell everyone, diversify your supply chain. We've been singing that song for 10 years. And if you look at the data going back for 10 years, not much has changed. China has been running between 40 and 43% market share. Viet Nam has been running between 10 and 14% market share. So there you go. You got two countries with 55% of the U.S. market. Not much has changed. And, you can put this on paper all you want. The reality is you buy product where you can get the best product at the best price and the best quality for the best delivery. And those rules will prevail irrespective of this black swan event.
Right. Agreed. And lastly, how do you think 2020 will shape up with macroeconomic factors such as COVID-19, US-China trade war, and the Brexit influencing the apparel industry parallelly?
Well, I don't know that anyone knows exactly how 2020 is going to shape up. We don't know how the next month is going to shape up at this point. And there's nobody out there that is going to tell you that it's going to be good. So everybody needs to buckle down and prepare for the worst and, be positive. We will get through this. We've gotten through everything else somehow, some way. We're going to get through this. The data and the numbers are not good. We look at malls that have closed in the United States. We used to have like 1,500 A malls. Now we're down probably close to 1,000. Last year we had 9,300 announced door closings on the retail side. We'll probably go to 15,000 this year. At this point, nobody knows. Everybody's got to take a hard look at their business and say, okay, we're going to survive this, but we're going to have to buckle down and figure out what we can do to sustain our growth and to balance our growth and to have a shift between online and brick and mortar so that, we can keep going when everything else is stopped. We're in a new era here, new world, and it's funny when unfortunately when has a death in the family, they talk about the 5 stages of mourning, and you can almost view coronavirus COVID-19 in the eyes of the 5 stages of mourning. What's the first thing that happened? Denial. Didn't really happen. Denial. What's the second thing? Anger. Everybody got upset. The third thing in the 5 stages, bargaining. Okay, let's renegotiate all of our positions here. What's the 4th step? This is the hard one. Depression. And I think that's yet to come. And that's personal depression, not worldwide depression.
Right.
And then the last thing, acceptance of where you are. And once you accept where you are and you can figure this out, we'll get through this. Everybody, who's listening to this podcast will understand. We'll get through this, but it's not going to be easy.
Definitely. I think the beginning of this decade has been one of the most challenging times, because what we have also analyzed, I think after the 2008 crisis, this is one major event that has hit all industries, across industries globally. And we really hope all of this ends soon. Everybody stays healthy, stays safe. The labor employment issues which are occurring in Asian countries are supposed to be taken care of. We hope brands and retailers come forward to take this initiative at this point, this time of trying of lockdowns and the global pandemic effects, all of that. But yes, this discussion was very, very insightful with you. Thank you, Rick, for all the insights on COVID-19 impact on the textile and apparel industry. It was a pleasure to have this discussion with you. And thank you to all our attendees too for their precious time. I am now available for the question answer session. Thank you.
Thank you.